Hello there, and welcome to the look ahead for Tuesday, the 5th of March, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, first up in focus is going to be China. We've got the ongoing National People's Congress, where the focus is going to be very much on whether Beijing is willing to put more stimulus into the economy in order to support a stronger economic recovery. I think a good indication of that is going to be the growth forecasts that come from these meetings. And that would give us an idea of whether they are actually looking to up the amount of stimulus that they're looking to put into the economy. Also in focus is going to be China's PMI, services PMI, which came in at 52.7 in January. Above that key 50 level, separating expansion from contraction. Also comes after the manufacturing PMI at the end of last week, which are actually a bit disappointing and contracted for a fifth straight month. Now, just as far as China is concerned, it's always interesting to be having a look at the FTSE. Now, we can see here the FTSE chart. FTSE did pick up last week from those lows around 76, but it failed to push really above the 77.10 level. And we've seen a fall off again today. I mean, as far as support is concerned, 76 is a level which that's last week's low, which is going to be offering some support. If we see a break below that, that's going to bring the 200 SMA into focus. On the upside, buyers are really going to need to get a level above that 77.10 in order to push towards 77.50 on the upside. Then just having a look also as far as the Eurozone is concerned, we've also got the services PMI and also the composite PMI. These are secondary readings after the preliminary readings earlier in the month, so not expected to be as market movement. We did see that the services PMI in the Eurozone moved back towards 50 out of contraction. The composite PMI, however, was still in contraction as the manufacturing sector remains pretty weak. Also in focus will be PPI, so that's the producer price index, which is expected to fall again, 0.1% down from 0.8%. This is an interesting gauge to be watching. It's often a lead indicator for CPI inflation. So if we're seeing continued cooling in PPI, then we could expect to see really continued cooling in the consumer price index. Now, this is the chart for Euro US dollar, very much in focus this week as we've got the ECB rate decision on Thursday. We can see that price is really consolidating between that 108 level and 108.60, 65, which was last week's high. We're at the upper end of that range, actually, as we speak. We do get a break above 108.65, then 108.65, yeah, then we'll be looking for a move towards 109, last week's high and the February high, and then if we can get above there, that brings 110 back into focus, the key psychological level. On the downside, the sellers are going to be looking for a move, first of all, below that 200 SMA, which, the price has been really sort of fluctuating around that 200 SMA now for a couple of weeks, or it feels like a couple of weeks at least. But if we do get a break to below there around the 108.35 level, it's going to test the 108, which was last week's low. Break below that could open the door to 107, which is the February low. Just finally, the other major things that we're going to be watching tomorrow is the ISM services PMI, expected to come in at just a little bit weaker at 53, down from 53.4, and factory orders, which are expected to cool quite significantly. Just having a quick look here about the ISM data. I mean, this is going to be very much in focus. I know this week we're talking a lot about Fed Chair Jerome Powell's testimony before Congress, and also the non-farm payroll report as key things to be watching. But the ISM data is going to be very much in focus as well, because there are concerns about inflation in that services sector, which seems to be pretty sticky. And that's something the Federal Reserve is going to be watching. And if we just have a look at this figures that I've pulled up here, we can see a breakdown of the ISM figures, we can see that new orders increased really quite strongly. But also, if you just have a look at that prices paid, I mean, that was up around 7.3 percentage points, a percentage change between December and January. So that is really quite a big pickup in prices paid, which is obviously inflationary. So that's going to be something to keep an eye on. If we do get in a stronger than expected ISM report and hot prices paid, then that's going to be seeing the market potentially push back on those rate cut expectations again. As I mentioned, we've also got factory orders coming in, expected to drop quite sharply, down 2.9% after just rising 0.2% yesterday. That comes after the ISM manufacturing data on Friday, which was quite a lot weaker than expected, down at 47, well in contraction territory, down below the 49.5 that was expected, and also saw the market just bring forward slightly those rate cut expectations. So they're going to be the key things to be watching. I think gold is a market that's really interesting right now. We can see that it's broken out above that 2065 level. It really powered higher at the end of the last week on the back of those weaker than expected manufacturing figures, taking out the 2050 resistance, also the 2065s, up around 2088 as we speak. So, really looking towards that 2100 level and powering on to those highs that we saw previously around the 2150 level. Do look, though, it is overbought. That means we should be cautious about buying in at these levels. We could see a period of consolidation or some pullback. Thank you very much for watching. If you like what you've seen, then please do give this video a like. And if you'd like to receive more videos like this, then please do subscribe.